Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented by Tusk Media. Before we jump in, take note of our beards. If you like the beard growth that you are seeing, if you really love our mustaches, go to our Movember page and donate. We all have individual pages, so it's kind of a contest. You can also donate to the team as a whole, but go to twitter.com/TuskMediaLLC. Give us a follow. You'll also see the pinned tweet right there. You can click on that, go directly to the team page. We're raising money, raising awareness for men's health issues, things like that, going straight to a nonprofit. So a couple of dudes helping dudes help dudes. That's what we do around here. Andrew Hall, Sam Frost, Ben Nye. How's it going, guys?
Doing good. It's going well.
Good, good. So we're continuing our recap of the Investor Kids Conference last week, talking about some of the ideas that we got pitched. We've talked about a couple of them so far. TRQ also just touched on NVIDIA just earlier, so who knows what order these videos will go up. But if you want to hear about those pitches, check them out. But right now we're going to talk about BIM. This was pitched by Leah Joyzell, founder and lead portfolio manager of Lizard Investors. Fantastic lizard pen that she had on when she pitched this stock. And it was kind of interesting the way she pitched this stock because she actually started off talking about a comparable company but a different company. She started talking about Aldi, the grocer. Ben, what were some of the things that stood out about the Aldi pitch?
Well, it's interesting. You don't usually see someone pitching a low-cost supplier. In a setting like this, usually it's like they emphasize the moat, then they emphasize how margins are going to rip and sales are going to rip, and then how analysts are totally wrong and the stock should be double the price. So when she started talking about low-cost provider, I honestly thought she was saying, and you should short these.
Right.
So I'd be interested to hear what you guys
Yeah. So it was, she started off talking about Aldi and then another grocer. I honestly can't remember. Lidl. So she's talking about these and really just praising the efficiency of it. I mean, that was kind of the theme of it. But she basically used
boxes.
Yeah. Used all of that to set up. Big fan of Aldi, by the way.
Yeah.
I'm a fan. Used all that to set up BIM grocers based out of Turkey. So kind of interesting pitch. What she said when you're looking for a low-cost provider, the 3 bullet points that she stressed, and I think these are probably good things to keep in mind when you're looking at this space in general, whether it's grocers or whoever, but low-cost providers. You want a simple concept. You want ruthless execution, which I loved because I just pictured like executions of people getting their heads cut off ruthlessly. And so I was wondering if that was actually happening at some of these Turkey stores. Wouldn't be surprised. And thirdly, you want scale that will actually widen your moat as you continue to scale and basically increase the barriers to entry in that low-cost space. So with BIM, Sam, I know you did some digging into the company and some of its ownership, things like that. What were some of your findings?
So our first kind of concern was this is a company based in Turkey. And so the question is, how much exposure do we want to Turkey? How confident do we feel of just Turkey in general? Developing, I guess. And so big question that was thought up by our PM, Matt Burton, who y'all have never seen on camera before, but he does exist, right?
Allegedly.
Is how much ownership do shareholders actually have in this company? The owner, CEO, founder, Mustafa, I believe is his last name, and it appears to be his brother owned approximately 25% of this company. So that's a good chunk of the company that we as shareholders have no control over. And so again, kind of being a little skeptical of Turkey in general, that's not a great starting place. Not sure that we want two guys running that company making all the decisions for us. And so to the next point, we then looked into a little bit of evaluation. And included in that valuation is a country risk premium. And so according to a study done by the Stern School of Business, published in July 2016, so a couple months delayed, Turkey's risk premium, they had at 4.21%. So basically what that does is that increases their cost of capital, which basically helps you adjust for how risky the earnings are for this company. With the 4.21% country risk premium added to it, I came out to a price target of about $15.60 US dollars, which is below yesterday's price of $16.21 in US dollars. A little bit different than what she was pitching this on. She was saying we were looking at, I believe, $20 a share, and that's, what was it, 2018 or 2020?
Yeah.
So right there kind of raised a little red flag, wondering if we're really wanting to take on that risk. Even if you're bullish on Turkey and you drive that country risk premium down a little bit, then you're still looking at maybe a flat share price.
Yeah, and one of the things that stood out was it seemed like a lot had to go right for not a whole lot of juice on this thing. I mean, pitching something that's trading in the 15s, hoping to get it up to the $20 mark, it seemed like not a whole lot of reward for that amount of risk. Would you agree?
Yeah, I would agree. And one of the reasons is because she spent a lot of time, I would say, at least the first half, talking about what you say, how scale increases the moat for the business, but and market share. But this company does not have that much market share in Turkey. She then said, this, I think it was like 10% max. I want to say it was even less than that in terms of market share. And so you start saying, well, the story doesn't quite fit. Yeah, I get that if they do go and get 30% of the market or 40% of the market, a la a Walmart, yeah, I mean, you could see that moat widen, and they'd be able to continue to drive down costs, and no one would be able to compete, kind of the Amazon type of model. But with not a very large amount of market share, you kind of wonder, how are they actually going to get from here to there? It's great to dream these great dreams, but I'm sure there are plenty of other people that we can say who are dreaming about a great idea that returns more than 33%.
And the other thing I would point out is, and I guess, it's kind of the two sides of the coin in terms of the challenge and the opportunity, but one of the most obvious coins, I guess, so to speak, when we're looking at this, was basically the fact that in Turkey, when you start looking at grocers and these convenience stores and things of that nature, 60% are non-modernized, meaning they're standalone, single, family-owned entities. Only 40% are kind of these chain, efficiency-driven of any kind operations. So on one hand, you say, yes, well, that means 60% of the market's probably wildly non-cost effective and probably very much is due for modernization. But the reality is, modern grocery stores are not exactly a new concept. There's a reason that these aren't taking over there, and probably the biggest reason is customer and family loyalty and kind of these neighborhood models where that's just how it's always been done. And it seems like you're going to have kind of an inherent challenge to breaking into that mold. So to say, oh, well, nobody's thought to break in here, I think that's a little bit of a strong claim to say, oh, well, finally now somebody can modernize these stores. I'm sure people have tried. And that seems like kind of a steep barrier, and I think that's really going to make it challenging to continue to grow there. If you have 60% of the population continuing to do things in really antiquated ways, there's probably some rationale behind that, even if we wouldn't agree with it.
And I was saying, to that point, she also said that this company has been public for how many years?
Yeah, it's been around.
It's been around, and for them to just be at the market share that they're at, to start preaching that they're going to have or steal the market share, not 100% sure where that thought is coming from.
Yeah, and the question, again, kind of getting back to your original point, you have to make a macro call in Turkey if you're going to do this, and I feel like it's extremely difficult to make a macro call in Turkey. I mean, we've seen these fluxes in sentiment toward Turkey especially, and also India about, they're finally going to get it together. This large economy, which is close to a powerhouse, in India's case it's close to China, in Turkey's case it's close to Europe. This big potential is finally going to be realized, and then it just kind of never seems to happen, and especially with Turkey, it's been disappointing what we've seen there earlier in this year. I don't know if you would call it a coup. Yeah,
Coup.
Yeah, right. So you have to make a macro call in Turkey, and at the country risk premium of just 4% of what you valued it at. I mean, it's like, I think I'd want more than 5% on my money for 10 years if I was going to lock it up on a 10-year bond in Turkey.
And see, my WACC that I ended up using was, I want to say around
15.
No, so Bloomberg had it at about 15%. The WACC that I calculated with this 4.21% country risk premium ended up coming in at about maybe 10 or 11%. So it's a very optimistic whack compared to what Bloomberg is, who we give a lot of credit to.
Yeah.
And we still didn't quite generate. Weren't showing any upside potential, and again, you would rather be more conservative and still seeing a lot of upside potential to give you a little bit of downside error on your valuation. And so seeing that really just kind of drove me off of it. I was hoping to come up with something like 100% return, and like,
real quick,
where in the world is that coming from?
Yeah. So I think that's about all we got. We are the Investing Podcast. We're only bullish on Turkey when it's Thanksgiving coming right around the corner. Y'all have a great day. We'll talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.